Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Splunk. So Splunk just reported their Q3 2022 results. I want to talk about the business's prospects. I want to talk about its guidance for Q4. I'm going to talk about one of the things that I really didn't like in this quarter, which is namely the share buybacks. Then we're going to talk about its valuation. And I mean, I get that the business is cheap, it's a 6 times forward sales, so we're going to go through that. Remember, as we go through, I'm talking about Splunk's fiscal year. So the fiscal year and calendar year are misaligned. So just keep that in mind, okay? So, I mean, if you look at this graph, okay, so this is how Splunk has done in the last 7 months. In the last, particularly November into early December, all growth stocks have been obliterated. Splunk hasn't been spared. What's more, the CEO decided to step down, the CEO steps down and, they pre-announced their earnings, and that hasn't stopped anything. The stock has just been absolutely obliterated. And when I think about this, I mean, it's not even so much about the fundamentals. I think that the fundamentals kind of a mixed bag. But when you look at a share price like that, I mean, unless you're particularly brave, I think very few investors are going to be wanting to buy into this stock right now. I mean, this is not investment advice, but just thinking this through, I think that this is kind of like a tough one. So the guidance for Q4 is pointing towards 6% year-over-year growth rates. And during the call, one of the analysts said, that's impressive guidance you put out there. And I'm scratching my head. I'm saying, no, this isn't impressive guidance. It's truly not. I don't know what planet you're on, because the business is, if you think about Q4 21 last year, they were negative 6% on the revenue growth rate line. And so against that easy comp, they were at just 6% growth rate. So if you think about it, as we start coming into next year, I mean, they're going to really come up against a difficult period. Now, remember, the whole story with Splunk is that they're in a transition period, that they're moving away from the license business to the subscription business, where the revenue gets recognized pro rata. And I get all of that, but don't get too overly distracted with the cloud business doing so terrifically well, because you have to remember that you're not just paying for the cloud business, you're buying Splunk as a whole. So just focus on the total revenues. I know that they try and distract as much as possible about the cloud business, and the cloud business is terrific, but that's just a large part of that is the cannibalization that's going by of the on-premise business. More and more businesses are transitioning to the cloud, and they already have that customer on board with the legacy business, so they just go and say, okay, you should upgrade to the cloud business. So they're just taking that customer from one pocket into the next pocket. So when they talk about, our cloud business is doing terrifically well, yeah, but that's because you're just taking the subscription from one side to put it on the other side. So I mean, just think about that momentarily. 2 months ago, I said that Splunk had fallen from grace, yet its underlying prospects remain reasonably attractive. So investors are left with a mixed bag. However, keep in mind that at 7 times next year's revenues, there's a lot of pessimism priced in already. And that really is the most difficult lesson for this value investor, because this value investor always thinks that cheap stocks are attractive, but you should remember, Michael, cheap stocks don't always represent good value. And I keep falling for that narrative. So even though I didn't fall for the narrative of the cloud, that Splunk is transitioning to a cloud business, I did fall for the narrative that it is a cheap stock. I didn't have any position here, but I can't remain a cheerleader of this stock when I go through this. So I wanted to highlight something positive, okay? Relative to earlier in Q1 and Q2 of this year, the gross margin profile has improved, okay? That being said, compared year over year, the gross margin profile has compressed by 300 basis points. So last year, you can see there on the far left, 79.9% gross margin profile. This year, 76.6%. That being said, the shares are up after hours. So I think that investors have looked through all this and they're like, yeah, okay, we've already taken a 30% hit in a month. We're kind of okay. This is not as bad as it looks. And I get that the near-term reaction, but I wouldn't be surprised to see this thing kind of selling off from here. So one of the things I want to highlight is that as we go through the income statement towards the bottom, non-GAAP operating margins were negative 10% relative to negative 2% in the same period a year ago. So you can see that the gross margin has compressed slightly. That's kind of dampened the profitability profile of the business. management were quick to highlight that, okay, yeah, but our operating cash flow from operations will end this year at approximately 100 million. Now, they talk about their guidance for the cloud business, and they say that the cloud business is going to reach approximately 3.9 billion, I think it is, of ARR in fiscal 23. Now, if we think about this, it's highly likely that Splunk's cash flow from operations may reach 200 million. So that would mean 100% year-over-year increase from right now into next year. So that's something worthwhile, something positive. So I do want to highlight something positive. I like to kind of see the two sides of the equation. Also, there's no doubt that the business is cheap. Now, let me just unpick this slightly. Splunk repurchased 800 million worth of stock at $145 a share. Now, I'm not being Captain Hindsight, and I'm not saying that the share price is lower now than when they purchased. I'm not just saying that, but think about this. There was 101 better uses of capital than just repurchasing shares. They could have used that significantly to improve the business. They could have improved the revenue growth rates. They could have tried to stabilize the gross margins. They could have even used some of that to pay down the 300 billion of convertibles that they have on their balance sheet. Million things that could have been used to, rather than being just deploying to buy back shares at a higher price. I mean, it doesn't make much sense to me. That seems to me really poor stew as a capital. I mean, ultimately that's where I stand, and I know that many people wouldn't agree with me. If you're a Splunk shareholder, you're probably hitting your hand on the desk saying that this is an excellent use of capital. I don't see that. And I get that the shares are cheaply valued, okay, at 6 times forward sales. But shares will get repriced higher when investors have conviction that the business is stable. If the business is exposed to big data, you look at Palantir. Palantir also has its problems, but you look at Palantir, they are giving a lot of investors a lot of visibility, and you don't get these kind of surprises from one quarter to the next. Okay, so you get a very stable revenue growth rate profile, and you're not seeing that in the case of Splunk. So yes, I get that Splunk is cheap on the surface, but I'm not 100% convinced that I'm going to be a cheerleader of this stock any longer. And just to remind everyone, yes, I understand that the way that the invoices has happened in the past, that was why there were negative year-over-year growth rates. But even if we look beyond that, it's difficult to get really behind the stock when they see that they just basically squandered 800 million worth of capital towards nothing. I mean, really, that capital is gone now. So I mean, there's kind of pluses and minuses here, but even though the stock is cheaply priced, I'm not going to be backing up this stock anymore. So yeah, if you want to find out what kind of stocks I'm particularly bullish about right now, don't forget to check out my marketplace. It's called Deep Value Returns. You can check out what other people have said about it, check out the reviews, and yeah, start your due diligence there, check out something else. And yeah, okay, thank you so much for listening. I'll see you next time. Bye-bye.